One more time just to get it right. We are live. Good morning to everyone, and thank you very much for joining us on Behind the Markets today. Today we'll be covering Futuristic Friday, and today we'll be going a bit into the future. Talking one of the big things I'm going to be talking about today, Vernon, is retirement. I'm going to have a conversation also about poverty and inflation. There is a battle, unfortunately, between the two forces raging out in the milli meal price. And we're going to have a conversation about that one very soon as well. Vernon, if you can hear me and maybe can confirm that you can hear me, good morning and how are you doing, my brother?
Yes, we can hear you, Mr. Mtwale. Thank you so much. I see you are not in your usual outfits, and I can tell it's a weekend already started. But we're doing all right as well here in Lusaka.
Yes. It's casual today. I wanted to once in a while. Yesterday was Ascension Day. People, I thought we should have noted that out. Yesterday was the day that our Lord and Savior. Because people always think that after Easter, he just when Easter Monday comes, just says, "Right, disciples, I'm alive. Peace out," and then he goes straight into the sky. No, he spent 40
Mm.
days with the disciples. And he kept on preaching to them, teaching them, and talking to them. And yesterday marks the day where Jesus finally ascended back into the heavens for all of us. So that was Ascension Day. It's a holiday in some countries. I wonder why not in our Christian nation, but it is a holiday in some countries. Let's get into today's Futuristic Friday conversation regarding the usual wealth talk. It is Futuristic Friday, and let's kick off with the market roundup. Market roundup today does talk about the fact that Kwacha did hit 18.68, 0.42% up in terms of the dollar. And then a dollar is up 3.23%. So it's regaining its strength back and it's back in a positive trading position. So the dollars in your portfolio have actually started to recover their strength. The Saka All Share Index yesterday went up by 0.05%. Slight movement up in Standard Chartered, which is one of the billion Kwacha stocks. So it actually pushed up the general all share index, which is now up 11.13% year to date. Bond index moved up regular speed of 0.06%. Bond index moved up on the regular speed of 0.606% yesterday, and also finally got up in dollars. It's down 22. Sorry, it's dollars to 0.24% as of yesterday, while interest rates are still below 23. Sorry, are still below 24. We are also getting ready for a bond auction coming up next week. The usual suspects of situations reissuances happening in the 3, 5, and 10 year, with new issuances happening in the 2, 5, in the 2, 7, and 15 year, the regular standard that we keep seeing on the market generally. So that's the general outlook of the market. We did see also the rand slip up yesterday, and this is what I keep saying yesterday when I said what we're experiencing is an Africa-wide FX problem, because all African currencies are taking a beating during this period. As you've seen, the rand is still at about 0.9634, even though the dollar has moved up 8.35% on the month. The rand has only moved up 1.6% on the month. That is two issues. African debt is having a problem, and South Africa is battling potential record load shedding this winter. They're kind of looking at the barrel of about 12 to 14 hours. Welcome, South Africa. Welcome to the pain we were feeling before, and I pray we do not continue going down that route ourselves as a country. But yes, it's the load shedding levels in South Africa have gotten to a point where whenever you switch on South African news, that's all they're talking about. They are now in the area where they're in our battleground of when we started dealing with 12 hours load shedding, where we had to start doing 8 hours here, 6 hours here. I think the worst one we ever experienced was that 15-hour one. That one was destruction, like, of all levels, of cataclysmic levels. Let's get into also now the GRZ bond index up 10.57% year to date. The secondary bond trading index up 0.06%. So we are seeing a secondary bond market that is actually equitable to the full stream bond market. So we are seeing strong activity still happen in the secondary bond market, mainly because of the legacy bonds that are still yielding quite high returns. So you remember you've still got quite a number of legacy bonds in the system, especially the long term ones, which were sold with yields in the mid 30%. So you've got really high interest bonds that are still somewhere in the system operating. Well, at the same time, the USD bond index is only up 7.12%, 0.35% down yesterday, and that's because of the strengthening of the dollar. While the GRZ yields came down by 0.002%, yields are still up 0.35% year to date. So we're still on the same path that we've been when it comes to bond index. Domestic bonds are starting to pick up pace, starting to pick up regular pace. Stock market has obviously started to reflate during the year, mainly because that CEC bump up that happened. And while at the same time, you're also looking at a dollar that's regaining a little bit of strength. Now, in the commodity market, we did see commodities lose 1.72% yesterday, while oil was also down 0.5%. In fact, I think it pushed down a little bit further, mainly because of the tensions of the losses that were incurred after the optimism on the debt ceiling talks. Gold down as well, 1.46% in dollars. So we're still seeing negative trading happening in the commodity spectrum around the world, signaling softer growth and fears, growth that is going to materialize weekly. Bitcoin back up 1.6%. As it pushed back up into the 500,000. So you can see it's been seesawing between 510, 520 effectively, all the way down to about 490. Ethereum back up 1.4% as well. So year to date, these two are strong, but as I keep telling you, very, very volatile assets, very volatile assets. But in the 1 year spectrum, Bitcoin is up in dollars, in Kwacha 1.75%. In dollars, in Kwacha, we did see gold down 1.04%, mainly due to the dollar drop in gold, but it's up 10.64% year to date. So across the assets, this is where we stand. We're waiting for the next inflation reads to update all of these. But across assets, we're seeing about 4.5% real return in bonds, with 5% real return in stocks, 2.9% real losses in dollars, and 4.5% real return in gold. So you can see really the stock market is still leading out of the conventional assets, while in terms of the crypto assets, we are still seeing them very high above. But that is mainly, I say it again, mainly because of because of the first quarter, the way they performed. After that, they've really been struggling to keep up, and we'll actually start giving you the monthly reads, especially once the month is up on these. Other data that we are looking at here, this is our oil outlook. Remember that we're expecting a 1 kwacha drop in the oil price this month, based on the cost plus movements and based on the movements of the dollar and the oil price. Brent prices are down 9% in this month, while the kwacha has strengthened by 1.3% versus last month, mainly because of the beginning of the month. It's just the beginning of the month. It had nothing to do with where we are now. It's really the beginning period when you're looking at the averages of the kwacha itself. So that is what has happened. And remember how high the kwacha was at the beginning of April. So that's pretty much what's also offsetting all of this. But if you're really looking at the tail ends here, we are also struggling to see whether there'll be a price movement downwards because of maybe the projections that we are seeing across the market. Other data that we are looking at here, we also are looking in terms of our 4 horsemen as of yesterday. US price paid index shows that inflation is still rising. We still did see the prices paid index, while Japanese inflation is on the rise. US capex spending has also been rising, while Egypt yesterday held interest rates still at about 18.25%. US short-term rates are still auctioning at elevated levels of 4.6, going all the way to 5%, showing that interest rates around the world are still determining higher interest rates in Zambia. So until we get past those high 5%, it's going to be tough to get foreign investors to start coming in and buying our bonds in this country. So for those of you who are still auctioning, you still got some leeway before you're still dealing with offshore investors in these markets. This is why some of the clients I am talking about who maybe are dealing with lump sums, who I'm talking to, or maybe are dealing with huge lump sums, people maybe have got the 500,000s or the 1 millions, who do have large amounts of money on them. Part of my advice I do give them is this is the time to perhaps, and maybe this will go against what I have advised to a few people, and this is if you've got about 10 years on your path, to then utilize your money to buy a long-term instrument and then use that long-term instrument to buy up more bonds alongside your savings. That actually creates an accelerated effect, because you're using large coupons to create big bond buying along the way. So this is still the time to play that mark, because it's giving you the cash flow that you are looking for. So that's what you're kind of trying to tap into the market right now. Tap into that cash flow because it can actually pile up as a good investment ammunition. At the meantime, while you've got high interest rates out there in the world, this is the time to start buying up those longer dated assets if you have the capacity to do so, especially if you've got large lump sums. If you've got smaller amounts of money, and I'm talking about smaller, I mean less than the 500,000, then my advice is stick to the regular 3 to 5 year purchasing of bonds, the consistent cycles of 3 to 5 years, anything between 1 to 500,000. Stick to the consecutive cycles of 3 to 5 year purchasing, unless you've got consistently large amounts that are coming in that can add up and total up. But until then, just play the regular game of just buying up regular assets. If you've got that month, so if you're somebody who says, look, I can save 2,000, 3,000, buy up bonds a month, then put the 2,000 into 3 to 5 year, because the purpose of buying the regular amounts, the 3 to 5 year bond, is just about using is about regular purchasing. But if you have huge, large lump sums that you can play around with, those are the ones that maybe you can consider. Also, data that's coming out is the U.S. jobless claims also came in lower than previously expected the previous week, and lower than expected. Now, that triggered a bit of a sell-off on the market because now it's expecting that the Federal Reserve is going to come in a bit stronger. So with strong debt talks in the Federal Reserve and also strong job markets, it's also triggering that the Federal Reserve's inflation fight is justified to continue being stronger and harder. The U.S. manufacturing also declined at a slower rate. It did decline, but declined at a slower rate. But we also saw 4.2 million U.S. homes selling. That is a slower rate than what we've seen in the last month, and also than expected. So these are mixed bags of data coming in together. So copper prices are still stuck between a slow manufacturing sector and a slowing housing sector. And this is where the fight is coming in. But I'm going to give you some upside on where copper is heading to in the future. But we are also seeing a job market that is still strong in America, which is leading to higher interest rates, which is still being pushed also along the side of a debt conversation. CapEx spending is still high, and also we did say yesterday that many African central banks are still going to be holding interest rates, as opposed to what we saw from our central bank, who's in inflation fighting mode. Though they're saying inflation will be coming down, there's still that fear coming into the market. Other news that's coming in yesterday, we have seen a $1 million feasibility study that has been funded by the US for the first ever battery energy storage. We'll go into that. The IMF Executive Board has actually approved $68 million disbursement for the second review for Benin, while Ghana, in other news, is looking for $10 billion overhaul in their debt. G7 leaders are set to meet in Hiroshima yesterday regarding China and Russia. So they want to talk about that, while the debt ceiling drama is not seen as good for the dollar. That's actually quite interesting that they've pushed out there. Copper slid yesterday. Copper slipped after a rebound to a 5.5-month low, mainly driven by. So copper has actually. Sorry, I don't know if we've got Vernon back there. To a 5.5-month low. As we've seen debt talks. As we've seen debt talks coming back in. Sorry, I think got a little bit of feedback from Vernon there. Yeah, as we've seen debt talks starting to simmer up in America, while at the same time we are starting to pick up on the fact that we are seeing Chinese data still weak at the moment. We also are picking up on the fact that President Biden is now confident that he can reach a resolution, and Speaker McCarthy did say it's doable by Friday. So we'll see today if they're actually going to get to a debt resolution today. Accelerating inflation in the EU has kept the ECB in inflation fighting mode for at least 2 more rate hikes. Gold also priced a bit lower, mainly due to US dealings. At the same time, oil had the same story. Zimbabwean banks, for the crypto traders and for the digital asset traders, would like to know the Zimbabwean banks may offer loans backed by the new digital currency, mainly as part of a strategy to support the local currency. Central bank yesterday it has also sold 72 kilograms of gold at the auction. So the central bank sells 72 kilograms of gold at the auction to try and help this. Now, Zimbabwe has also released the new digital currency to try and help fend off the dollarization that they're facing. But this is literally the loss of their currency, the absolute devastation of the Zim dollar. And that is the main news coming in today. And then we'll be switching now. Sorry, just checking if we've managed to get a little bit of Vernon back without the feedback. Unfortunately, we're still on the struggle there. So going into the next part, let's touch into our deep dive. So yesterday there was a story that came out that a company called Green Africa, I think, has actually Africa Green Co. has actually been part of a feasibility study to build a battery energy storage system in Zambia. So that is actually what they're trying to do, and the battery energy storage system project is being developed through a special purpose vehicle developed by Greenco. It will have a capacity of 25 megawatts. And this is obviously to try and help with alternative energy. The and it is $1 million feasibility study, and we will see what the outcome will be for that. Now, in other news, as I said, sorry about that. If I don't know if we're trying to get a word from our brother here, Vernon. We'll see what the outcome will be for that. Now, in other news. Okay, yeah. So I think the main thing that we are looking at here is news coming out of Chile that the Chilean government has greenlit a mining tax reform that will boost government's take. So this is a big story now. The Chilean House has actually has actually now said that the government will require local copper and lithium producers to pay more taxes and royalty to the government. Top tax rate will reach up to nearly 47% of companies producing 80,000 metric tons a year, 1% ad valorem tax on copper sales for anyone producing 50,000 metric tons a year, and an additional 8 to 26% tax depending on mining operating margins. So Chile is going after huge taxes here on lithium and copper. Now, the problem is maybe this is what's good for Zambia. Because of all these socialist policies that are happening in Peru and Chile, what we're actually starting to see is that production is struggling. Remember that Chile is down to a 25-year low. So when production is struggling right now, we're going to have issues in the copper industry. And that leads us to our second deep dive story. Copper concentrate market is supposed to face a steep deficit by the year 2025. So currently, we have a surplus of copper production, about 240,000 metric tons of copper production, which is set to get to 243 by 2024. So this year and next year, you're expecting soft copper prices. And I think this is why a lot of our copper production from our mines is low right now. They're holding their firepower for when the prices are expected to be high in the next 2 to 3 years. So a lot of the mines are going to hold back. So we're not going to get much in terms of mineral taxes or anything. So what you're seeing from the mining companies is understanding this dynamic. They're investing heavily now to expand their mining capacity, so that at the time when there's a deficit from 2026 onwards going up to 2030 because of the EV race and because of environmental spending and renewable energy spending, where they'll be ready to now pump out as much copper when the prices can hit a price somewhere around $11,000 to $200 and to $15,000. Because remember that we're gonna keep having a growing deficit of copper all the way going up to the year 2050 now. So what you're seeing is that they're utilizing this downtime to expand capacity. So we're not going to see a lot of change in our mining sector probably this year and next year, but the next year, 2025 going onwards, that's probably going to be a signal. So you're seeing, and the reason you're seeing this is that Chile, Indonesia, and India are expected to add 2.6 million, 725,000, and 1 million respective in smelter capacity. Okay. They're going to add smelter capacity. So in other words, the demand from these three alone is going to grow rapidly. And they're going to keep adding smelter capacity. In other words, the amount of copper that they keep needing to put into their smelters because of the economic activity that they're going to be doing. So between 2025 and 2027, Asian smelters will ramp up capacity, trying to match while mining projects are going to be lagging. Okay, so Chile is not having enough mining projects getting started. You're getting slowdowns because of all these socialist taxes. So this is actually leading into something that will benefit Zambia. So this year and next year, copper is going to be at a surplus. So the prices are not going to rage in the next 2 years. It's the year after where you're going to see a steep deficit, somewhere in 2026, where you're going to see a steep deficit of 600,000, double the surplus you're seeing now That's going to start driving the copper prices upwards. That'll probably lead to a lot more growth in our mining sector. So for those of us who are looking at where to go, there is a question that has come here, and I think there's always this conversation about trying to tax mines. And I understand the way everyone comes. It's a very emotional subject, unfortunately. And I'm not saying this person is being, but I'm saying mines tend to be a very riveting subject. Malcolm Piria said, "Can we take the same route as Chile?" Well, I think you also have to bear in mind that Chile is losing the race in Zambia. It's losing the race globally. Their output has been declining due to the quality of their ore, but now there's been a seriously slow output in terms of investment in that area. And whether their government is going to be able to take it on, that's a different story. I think the only thing that's helping Chile more than anything is also the amount of lithium that's in Chile. So Chile actually has quite a lot of lithium. They still can't take on Australia, but they have quite a lot of lithium there. That's actually helping. That might help them support getting invested. So should we ramp up taxes? Remember, we did this. We ramped up taxes and we actually lost tax revenue even more. And we got no investment in the mining sector. So there was no investment and there was no revenue coming out of mining. Then we took over some mines which have now been mothballed. So ask yourself the question, should we be aggressively going after our mines, or should we be looking at how to expand our abilities ourselves? Now, I know this is a difficult conversation for most people because everybody thinks that if we just grab as much out of the mines as possible, then we can fund everything we can. The problem is a lot of us think that that means that the mines are going to operate at the same capacity. When mines are taxed, they tend to slow down. That's what they do. They tend to slow down on investment. They tend to slow down on capacity. So I think we have to just kind of balance this out. And one of the things we've done as a kind of switch up with the mines, which is actually quite interesting, is the ZCCM deal. So if you look very carefully at that, we have effectively instituted a tax. It's just not exactly the same. By adding an extra 3.3% of royalty that goes to ZCCM, that's actually an increased tax effectively. Okay. Because that entity one is 93% owned by government and government agencies. Because it's the IDC, Ministry of Finance, and NAPSA owns ZCCM. So if ZCCM collecting, that's actually the government indirectly collecting a lot more, and them being acceptable to that. And yes, it's come at the battle of dividends, but it's a more stable cash flow that you will find. ZCCM has also got a strong dividend policy. So instead of collecting taxes, we're collecting a royalty through a company that is mostly government owned that is going to then pay a dividend to the government. So it's effectively there. The only issue Chile is going to start facing is new projects. Even the Mining Association in Chile said, we're not even into what's happening here anymore. The ore qualities have started to drop. The real target for a lot of the mining companies is Africa, because that's where they're seeing a lot more higher quality ore. So should we go into increasing taxes? Let's give it a shot. You see what happens. I mean, we tried it before and it didn't work out too well. Pretty much shut down the mining industry, and then we ended up hurting ourselves quite poorly. So I'm not sure if taxation is the best option. What I do think we need to start working on is teaching our people how to actually operate mines from scratch. And I'm not talking about how to run a mine as an employee, how to run the value chain of a mine all the way to the actual trading desks in Shanghai and the London metals, how to actually deal with mining derivatives contracts. That is where the problem of our people come. We know how to get that copper out the ground. It's once it gets out the ground, getting it to the person who wants to buy it. This is where the issues start to come. And then accessing the capital to do that. Remember, mining is capital intensive. Most of these mining companies come from countries where they've got interest rates in the single digit range. So for us to be able to do that, it's a difficult swing, because we can't access single digit interest for mining activity. Okay, we can't go to a big JP Morgan or these huge banks and then start getting equipment and putting it in at single digit interest. That's not going to happen for us. We're going to walk up to one of those banks. They're going to give us huge interest rates on any loans that we have. So we have to kind of balance up here what we'd like to be doing with our mining sector. I've never been a fan of overtaxing mines or trying to take over already existing mines. I just think we need to start teaching people how from the ground to start building this actual mining industry up, because that's what the Chinese have learned. Chinese have learned how to mine from the grassroots level and built mining conglomerates. So they've actually built this thing out. But we want to take over existing mines or tax heavily existing mines, because it seems we don't want to do that work of building a mine. Vernon, I hope maybe the sound can allow you, but I don't know what your thoughts are on this situation. Want to do that work of building a mine. Vernon, I hope maybe the sound can allow you, but I don't know what your thoughts are on this situation. Want to do that work of building.
Yeah, sorry, we're having a bit of what do you call it? A bit of connectivity issue and whatnot. But of course, going on the other side. So primarily, um, like of course mentioned earlier that this is quite a bit of an emotional issue for people, because then this is how most of the people, of course, in that part of the country, finding, or that's one of the most prominent means of earning life and just primarily feeding people. So you see, you find that we are in this scenario where like earlier mentioned, of course, by the head of state yesterday during the conference, that there's a lot of legal matters tied around the aspect of the mines, and so I feel not to brush off the whole aspect of mining and mining activity in the country. Of course, mines, the mines actually have been a backbone for Zambia for the longest time possible, and if anything, we are known for this particular production of mineral resources and whatnot at the end of the day. And so I feel if we are going to continue on this trajectory of waiting on the government to make supplications on how and just facilitate more on the mines, I feel we'll be killing ourselves in the long run. Can provide other alternatives, and actually has provided other alternatives. And earlier mentioned, of course, on this very platform, we've tried to bring into perspective the aspect of diversification and doing other things. Now, the fact that we've trickled down to only but mining itself, and then if you follow too closely, you will learn, Mutuale, that very few Zambians are on, for example, the managerial aspects or the actual, mining. Where if someone says, we're going to leave the mine in your hands as Zambians, are we going to be able to run the mines from wherever it has been left off to, and operating it, and so that it does not fail? Chances are, if a mine has been let us to us Zambians, I don't know for how long it will be standing until it actually all cripples down. But if we will be crying for opportunities and in the mining sector just to be lucrative and up and running, we, like you said, we have got to understand that we are able to run and we know how these things work. So I feel as much as this is one of the most prominent ways that Zambians on the other side of the country really know how to earn money and just earn living, I think it's important for us to understand also how these things are working, and of course how they are going to be benefiting us as a country as a whole. Currently, for something that is actually out of our reach. Most Zambians, we are the ones picking the stones and not processing the whole thing until it is done. And also this aspect of us wanting to only but investors who are able to, who have the financial capacity, are happy to come and invest and lead, and when they're able to make their profits, they go back home. So I feel we should find other means and alternatives living apart from heavily relying on mining. And now the mining sector, it has been pressured so much because a lot of young people were so dependent, and I think just on the mines. Now that, of course, they've trickled down a little bit, and actually they've been shut down. Let's put it as it is. They've been shut down, until further notice. Here we are today. Imagine if we're going to have a similar situation in the agricultural sector. Already, we're hearing people complaining about soybeans because we are used to always offloading to FRA. And this is why today, whenever there's this situation that the FRA is unable to buy the expected target, we feel like business has not been going so well of late. So diversification will do us a lot of good. It's as simple as Mutuala, you have a job, and then when things get tougher, you just job so that you're able to meet your needs, your essentials, your bills, your transportation movements and costs and whatnot. In that regard, it's easier for you to meet, your living costs at the end of the day. So I feel not to be naive or to be modest with these people on the other side who've been in the mining sector, but let us try to find other ways we can make this work. I'm not saying get out of the mining sector. No, find ways to get back on the mining sector, but away from the government. You can still be mining and regulated by the government, not expecting the same mines, of course, to still be running. And this is something that probably should be. We can have mining activities, but away from KCM, from Konkola copper mines. Government will always regulate, but do it in a different way. At the end of the day,
I think just to circle back, Vernon, I think we just so
the
that we don't miss
pile
the
up of
question.
issues, it's probably yes.
I'm saying just to circle back, the actual issue I think people are trying to find out is should we be taxing the multinational mining? Um, my problem I have with this argument, and it's not like I said, it's not dig at the person who brought it up. It's a constant question that comes up is that it is talked about specifically to try and schleff off the responsibility for economic growth and economic development from the Zambian people. We need to get to a situation, Vernon, where we as the people are doing the actual growing of this economy. Where the problem starts to come down from when it comes to Zambians and mines is that we know how to work in a mine, we don't know how to run a mine. And the reason I say this is we don't know the global mining value chain. That's where the problem is coming from. Okay. The global mining value chain is different to going down a shaft and picking copper out the ground. That's different. The global mining value chain now derives that you have to take the next steps in taking this thing from where it is now into the transport and shipping aisles, getting financing for it, because some of this copper, the copper that comes out the ground, has already been purchased, by the way. There are already futures contracts that are holding on to it. We don't have those relationships. We don't have the banking relationships. We don't have the supplier relationships. The biggest failure of Zambians with operating minings is the lack of international relationships that have been built. China comes into this country and runs mines because back where they are, they've got metals companies who are making electronics, wiring, and all sorts of things. They know where that stuff is ending up. That's why it's very easy for China to come into Zambia, into Congo, and start extracting cobalt and stuff because they know where it's going to end up. The first part of running any business, people, is knowing the end customer. If you have zero relationship with the end customer, your business will die. Whether it's a government owned mine, whether it's a Gantemba, whatever it is, if there is no relationship with the end customer, it is a dead business on the water. Okay, so this is what we all have to start figuring out. Do we as Zambians have the ability or have the capabilities to start building the mining relationships going forward if you want to start running mines? Because that's where you need to start fixing this. It's not as simple as picking stuff out the ground, putting it on a tray, and then allowing the global economy to come running. They'll shun you and they'll let your mine just die off so that they can come and get it for bits. And then this is what we're not getting. So the reason I say this is copper was something we used to process before the colonial parties came into Zambia. We used to extract copper out the ground and create a currency called the Katanga X. And the Katanga X was something that we used to bury our dead with, so that they could bargain their way through the afterlife. So, in as crude a method, Vernon, there was an industry that actually required copper production within Zambia and the DRC region. The problem is we don't have a domestic industry where we process this stuff properly. If we did, we'd probably become better at mining it. So, one of the best ways to actually start going back up the value chain for something is to start at the end. What is the end use of this thing? If we can start producing with copper properly, then probably we can start going back up the value chain and making the investments. And that will probably improve our abilities to manage and mine it properly. But the problem comes down to the fact that we don't. So what we're hoping to do is tax the mines as much as we can so that the government can get as much as possible, schleff off the responsibility from the bigger guns from us people in the economy, and hopefully the government will have more money to spend on us and to give us stuff and to do stuff for us. And so it's all about trying to get the mines to develop the country, but the people are not developing entrepreneurially. I think this is where my big debate keeps coming down when it comes to this conversation. So you also want to be very careful about going the Chilean route now, because you're getting the investments for increased capacity now because your taxes are a bit more friendly. What's gonna happen is that you will lose that out and then start saying, but they failed us again. So this conversation about constantly trying to go back and forth is really an internal struggle between the Zambian people about trying to get their business acumen correct. Sorry, Vernon, I don't know if we have the nine. Just give me a thumbs up or not. If we have the 1945, or should we just continue? Give me a thumbs up or not if 1945 is it right.
You
So
have
we will
actually.
continue. Yeah. So let's take a quick break to people, and then we'll be able to come back regarding the closure of this issue and a big conversation we're having, which will lean into this.
All right, and we're back at it.
Right. So I think one like I said, the whole mining tax conversation reminds me of family financing. Whenever you find an event going on in a family, everybody looks to uncle or auntie in Darama to be the one to bankroll the wedding. We've got this wedding that's happening, and it's 50 to 100,000. But our rich uncle will fund it all. Everybody else, nobody wants to put money in together. Nobody wants to improve themselves. They just want the rich uncle or the rich auntie to do all the funding for them and impress them with their money. And they've gotten so used to this idea. We've seen this at family level. They've gotten so used to this idea of the rich one person doing everything. This is how the black tax system works. And that's how it's an African mindset that when one has made it, okay, and I'm sorry to say this, and we need to fix this, that when one has made it and when one is rich in society, it's now their duty to take care of us and to give us the most lavish life. So now, if we have a rich person in our family, Vernon, even if I'm not rich, if we have one rich person in our family, then every wedding in this family must be at a hotel. Okay, then every funeral has to be done in a plush and lavish way. As long as we have that one rich person, it's now their duty to uplift the family in terms of our lifestyles now. And this is what we're doing with our mining sector. We're making it the duty of the mining sector, instead of expanding the other parts of the industries, building millionaires. There are millionaires coming out of education, millionaires coming out of communication, millionaires coming out of farming. There are people who can build wealth in those areas. But because there's one rich industry in the country, it's now that industry's job to give us everything we want, to give us the nice life, everything. What we must do, okay, and I'm not saying, and that's what I'm saying. I'm not saying that the mines I'm not here to defend them or anything. I'm just telling you the truth that the biggest problem is the conversation about mines is almost a distraction about the entrepreneurial development of the Zambian people. The core problem of Zambia and why there is poverty and problems is because we have not developed enterprise, and we're not getting people to develop proper enterprise. We're talking about a capital intensive industry. So let me give you an example, Vernon. Alfred Boeing. Everybody knows William Boeing. Sorry, everybody knows Boeing Airlines. Boeing airlines are a very expensive thing to build. But did he start in the airline industry? No. Boeing started as a timber company. The guy was cutting trees. Okay. That's what he was doing as a business. He made millions in that business, sold it, and used the proceeds from that business to go into the airline industry. So there are some intermittent industries you can start in. Most of these people who are in mining, all this stuff, if you go back to their wealth and where they started in something less capital intensive and then got into capital intensive activities. Now, us, step one, we want to go straight into capital intensive activity. When just becoming very good at less capital intensive activities, having financial acumen, building wealth, then having that capital that allows you to attract capital to be able to then go into ventures like this. So this is where I think the struggle has always been coming for us as a people to actually go into such industries, because we don't seem to want to prove ourselves in less capital intensive industries to then gather the capital acumen, the knowledge, the relationship with banks, so that we can actually go into more capital intensive industries. The best example, I think, is the biggest company in this country, and I know people think about it, companies like Trade Kings. They started selling stuff. Now they are able to invest in things like steel and all that stuff. If you look at their story, it's simply because they started in less capital intensive, kept reinvesting, expanding their business to the point where they could now go into very capital intensive factories and go into very capital intensive parts of the economy. How many Zambians are willing to take that journey? That's the conversation you need to start having. How many people are willing to be faithful in the smaller stages so that they can be fruitful in the bigger stages? How many of us are doing that? Okay, and that's the entrepreneur. That's the problem that's limiting us. So the only way we can benefit from mines is just to say, send the government to tax them. That's the only way. We can't even aspire to get there because we know we don't have the discipline to build that journey that we're talking about. That's one of the conversations. But another thing that I have on my mind, Vernon, from yesterday, has got to do with this chart. Now, yesterday we've been having conversations, Vernon, about maize prices. So I wanted to bring maize from a different spin for people, just a different direction for us to try and look at the whole maize situation. And I want to call this poverty versus inflation. But this chart here, Vernon, shows you what percentage of a bag of milli meal is just the maize itself, the price of the maize itself, not even transported, not stored, nothing, just the buying price of a bag of maize. So it's per kg versus per kg. And as you can see, on average, 50% of a bag of milli meal is just maize. Now, I want to really have this conversation with people because we're always talking about suppressing the price of maize. Oh, milli meal has to be cheap. Milli meal has to be cheap. But at whose expense, Vernon? Because let's have this conversation out. Milli meal is basically coming from maize. Okay, who grows the maize in this country? 95% of the maize is grown by the peasant farmers of this country, the poorest people of our nation. Okay, the majority of it. So how do you expect them to get out of poverty if you are constantly suppressing the price of maize? Okay, right now the price of maize is the price of maize and milli meal are a result. They are a strict result of the fact that the global or the regional community is currently under strict situations and they need our milli meal and maize, and therefore they are rising the prices up. And we've been talking about demand squeeze inflation for I think the past 4 years. People go back to my videos for 4 years. I've been talking about demand squeeze inflation in the milli meal industry as the biggest threat to the price of milling meal. But I've said that this is a natural situation because if you want to pull farmers out of poverty, which is the majority of our population, the biggest part of our population is farming the maize that feeds this country and hopefully can feed this region. And if you want them to get out of poverty, they need better prices of maize. And the people of this country have proven that they don't want to pay higher prices. So where else can these people go? So the problem I'm having is that people may not realize it, but the price of milli meal argument is actually a bourgeois argument because the people who are in the middle and at least in a better off situation don't want to be inconvenienced by the poverty aspirations of the poor. They're trying to get out of poverty, so they need higher prices. You can't pay them, so they have to start selling it to DRC, Kenya, wherever they can go. So that's why they need to get these milli meal bags exported, because the more milli meal is exported, the higher prices that we can start to give the farming community, the higher prices, the more out of poverty they get pulled out. So who deserves to get pulled out of poverty? So this is the battle here. It's those who have a little bit of comfort, who really don't want to now push, who really don't want these ones who are at the bottom. Because there's an old argument about inflation, Vernon. Inflation is a tricky thing because everybody wants what they sell to go up in price. Like your time, for example, you want your salary to go up in price. Okay, so you don't want to report extra hours at work, but you want your boss to pay you more. So you want your salary to go up. You want everything to go up. You want your business profits to go up, but you don't want the things you buy to go up in price. That is the tricky thing about this inflation conversation. That is why there's always going to be inflation in society, because everybody wants their prices to go up. Whether it's the person farming maize, whether it's the milli meal company, whether it's anybody, everybody wants their prices to go up because that's more profit for them. You as an individual also want that as well. You can't start saying everyone is greedy for that. You want that because I don't see any of you, when the prices of things go down, go to your boss and start asking them to cut your salary. I don't see any single one of you doing that. So the reality is every single person in an economy wants their prices to go up, okay? Not just for fending off inflation, because you want a better life. You go to work every day, you start to improve yourself, you want a better salary. Because why? You want to afford more, you want to save more, you want to have more wealth. So why do we want to limit the aspirations of the people at the bottom of our economy to get better prices for maize? This is the conversation you're going to have, because you want to talk on one hand about poverty alleviation of the country, but you don't want to have to pay the cost for it. Here's what Zambians need to recognize. Inflation is the cost of poverty alleviation. Things in China got more expensive as the Chinese people got pulled out of poverty. That is a reality. Okay. So if you want to pull the majority of Zambians out of poverty, a bag of milli meal is going to have to get a bit more expensive. Okay, because that's going to be the result of more people getting wealthier from farming because of higher margins. As long as you've got a lower cost asset farming operation and higher cost because of regional selling, then you can get a larger part of the population out of poverty. Zambians have to switch their mindset from inflation to income. We as people have to become more aggressive about growing income rather than fighting inflation. The only reason we fear inflation as much as we do is because we're not aggressive about pushing our income levels up. Okay, maybe it's salary mindset, whatever it is. Even at workplaces, we don't sell and push commissions. So until we become revenue aggressive as people, we're going to have a problem with this inflation conversation. And what's going to keep the poor is that the middle are going to keep demanding a push downwards on the milli meal prices for the specific purpose. Yes, now that does disadvantage the poor to a little extent. It does. But what disadvantages the poor more, Vernon? Bad maize prices where they're not even earning money, or higher price bags of milli meal. That's the trade-off here, because a larger majority of people are going to benefit from a 250 kwacha maize bag, or a 200 plus kwacha bag of milli meal. A larger majority of people are going to benefit from that than the people who are going to be complaining. And we can say as much as we want about that, but a larger majority of people are actually going to benefit from that, because they're going to be able to, especially if it's driven to export. That's the big conversation we should actually be looking at. And I know it's not a popular one. Because a lot of us are not the ones who have to grow this maize. We take for granted what it takes for somebody to go into a field and grow the food you're eating every single day. We take that for granted. Okay? But the reality is, let's actually start making this a bit better. Okay, so that's maybe on the other side. We can go in, Vernon, before we pick the final comment and and move forward. I don't know if you got anything to say on that. So your mic is on mute.
Right. So I was saying, it's one of those conversations once again that will take you quite some time just to pick up and really have a proper understanding. Because trust me, someone right now listening, they have their own perception, from a consumer aspect maybe, or from a farmer's aspect and production aspect. But ultimately, it's attain a sense of harmonization on these particular aspects of this matter. As much as we want lower prices as consumers, equally the farmers have to be on a fair chart where it's also reasonable for them. You can't be putting in so much and then you're producing and then you actually have little returns. That would be unfair. I mean, that's not how business works generally. So I feel as much as we'll be complaining on the end of the rope as consumers, let's see how we can also balance out, because then the more lower prices we want, the less those guys farming actually will be discouraged. And actually, we already have seen a lot of them pulling out of the business. So let's think of ourselves as we think of others as well. I think on that note, I'll be ending my thoughts for the day. Sorry, of course, to our listeners and viewers for the connectivity disruption. And of course, we hope on Monday we'll just have a smooth ride moving forward.
All right. So we do have one final comment, and we'll just allow it to show. This is Kenford Muloa, who has said, "That's unfortunate indeed. We just pick stones and never get involved in value addition. Munyumba, let's become the change we need to see." As you said it, define the end user, build state capacity that aligns with the global mining value chain. It's high time we need to build local solutions for local programs. So part of what will help us start getting better at mining is if we start doing battery production, wire production, things like that. If we start doing that stuff here at a lot higher state, and we start to get contracts for that maybe here, rather than having that stuff being produced elsewhere, you'll probably find that we get a lot better at extracting the input. That's better. So when you can process the thing better for the end consumer, and you got an end customer, you often do find that you're able to do it. That's why I said, how come a bunch of Zambians who were living back then were able to get Katanga X's made? Because they had a reason to make it. That was the issue. But anyway, I will close that down. For everyone who's been missing on God's Economy, I will be back this Sunday. I had took a little break for a while, but I'll be back this Sunday. Check you out on Sunday. Vernon, see you soon.
Thank you. We'll see you.